All right, so get ready to dive into the fascinating world of Grasim Industries Limited.
Fascinating is right.
We asked for some reports on this company,
Yeah.
and you sent us a stack of financial reports and corporate filings.
Mm-hmm.
This company is huge GE. It's an Indian manufacturing giant,
Oh, yeah.
part of the Aditya Birla Group,
Mm-hmm.
and they're involved in just about everything, from like the clothes you wear
Really, truly a conglomerate.
to the buildings you see. I mean, just
Ah.
incredible. So our mission today is to kind of cut through all the jargon, all the financial mumbo jumbo, and
Absolutely.
help you understand what's really going on with Grasim.
Yep.
What are the key takeaways from all of these documents? Where's Grasim headed?
Exactly. Trying to get those valuable insights, those aha moments
Yeah,
from what can seem like a mountain of data.
right. Well, let's start with their recent performance. Grasim just released its unaudited financial results for the quarter,
Yeah.
and half year ended September 30th, 2024.
Ah.
And, at first glance, things seem pretty good.
Yeah, I mean, revenue is up significantly year over year.
Yeah.
It seems like they're riding a wave of growth.
Yeah,
But
right.
as with any in-depth analysis, the devil is in the details.
Right,
Right.
right. That's where you come in.
Yeah.
So what details caught your eye when you're looking through this?
Well, while the revenue is soaring, their operating margins have actually dipped a bit compared to
Yeah.
the same period last year. This
Hmm.
could be a sign of rising input costs
Yeah,
or even, increased competition in some of their key markets.
right.
It's definitely something to watch closely moving forward.
Okay, makes sense.
Yeah,
Strong revenue is great, but maintaining profitability is key.
exactly.
Now, there's this line item in the report about a second and final call of 906
Okay.
per partly paid up equity share.
Yeah.
I'll be honest, this one threw me for a loop. I don't really know what that means.
Yeah, the world of financial terminology can be a bit confusing.
Yeah.
Essentially, think of it like this. Imagine you bought a piece of furniture, but only paid a portion of the price up front.
Okay. Yeah.
This second and final call is Grasim asking shareholders to pay the remaining balance on shares they purchased earlier,
Yes.
likely during a rights issue, which is a way for companies to raise additional capital from existing shareholders.
Oh, okay. So they're basically collecting on like an installment plan.
Exactly.
Interesting.
Yeah.
Let's shift gears a little bit and look at their standalone financials.
Okay.
There were a couple of things that really jumped out at me here. First, this 50 crore write-off for a capital work in progress project.
Yeah.
I mean, they literally had to dismantle the whole thing
Wow.
due to legal delays.
That's rough.
I mean,
That's a pretty stark illustration of the challenges companies can face with project execution,
yeah.
especially in a complex regulatory environment like India's.
Mm.
Not only are they losing the money already invested, but it also raises questions about their ability to deal with, legal hurdles effectively.
Yeah, you almost have to wonder about the internal decision-making
Yeah.
that led to that. Like, what were they thinking?
Exactly.
Anyway,
Yeah.
moving on, there's also rather hefty euro 715.60 crore
Oh, wow.
impairment charge related to their investment in AV Terrace Bay Inc., a Canadian company.
Oh, interesting.
What is that all about?
Well, this write-down suggests they're facing headwinds in one of their international ventures.
Okay.
Impairment charges essentially mean they had to reduce the value of that investment on their books,
Hmm.
probably because it's not performing as well as they initially hoped.
Makes sense.
It's a reminder that international expansion, while potentially lucrative, also comes with its own set of risks,
Yeah, absolutely.
like a financial ouch.
Yeah, for sure.
Before we move on from these standalone financials,
Okay.
there's one more interesting tidbit I wanted to touch on. Employee stock options.
Right.
They transferred over 117,000 equity shares to employees through their employee welfare trust.
What's the thinking there?
That's actually a common strategy companies use to incentivize employees and kind of foster a sense of ownership,
Yeah.
By granting these stock options, they're essentially giving employees a chance to benefit directly from the company's success.
Right.
It aligns their interests with those of the shareholders.
It's kind of like, hey, we're all in this together.
Exactly.
Yeah. Okay, so we've unpacked the standalone financials.
Yeah.
Let's broaden our perspective
Okay.
and look at the consolidated picture,
All right.
which includes all of Grasim's subsidiaries.
Mm-hmm.
This is where we see the true scale
Yeah.
of their operations.
Oh, yeah, absolutely. We're talking about a company with significant revenue streams
Yep.
from a diverse range of segments: cellulosic fibers,
Yeah.
chemicals,
A lot.
building materials, and financial services.
Yeah.
Each of these plays a vital role in their overall performance.
And it's interesting because they actually restructured their segment reporting
Yep.
to create a separate building materials category.
Yeah.
So clearly they're placing a lot of emphasis in this area.
Yeah. This restructuring is a clear indication of Grasim's strategic focus.
Mm-hmm.
The building materials segment is likely seen as a key growth driver for the company,
Yeah.
especially as India continues to urbanize and
Right.
invest in infrastructure.
It makes a lot of sense.
Yeah.
Now, the consolidated cash flow statement,
Okay.
that's where things get really interesting.
All right.
We see massive investments in property, plant, and equipment, which suggests significant expansion plans.
Exactly. But, alongside those investments, they also had a substantial rights issue that brought in a huge amount of cash.
Oh, okay.
This influx of capital could be used to fund further acquisitions, large-scale projects, or perhaps even just to shore up their financial position in anticipation of future challenges.
So they're not afraid to make big moves.
Definitely not.
It's quite a balancing act, though, managing that kind of growth, that rapid growth, while maintaining financial stability. Now, you mentioned potential challenges earlier.
Right.
Let's dive into the legal and regulatory landscape.
Okay.
Surrounding Grasim, big businesses and legal battles, it seems like they go hand in hand.
They often do.
And Grasim is no exception.
That's right. And there's one particular case that stands out. The ongoing battle between their subsidiary, Ultratech Cement, and the Competition Commission of India, or CCI.
Oh, yes, I remember reading about this. The CCI imposed some massive penalties, didn't they?
Yeah, back in 2016 and 2017, Ultratech was hit with penalties totaling over 1,685 crores
Wow.
for alleged anti-competitive practices. They've been appealing these penalties ever since.
So where do things stand now with this legal battle? What are the potential implications for Grasim?
It's been a bit of a roller coaster,
Yeah.
to be honest.
Sure.
The National Company Law Appellate Tribunal,
Yeah.
they initially upheld the CCI's ruling,
Right.
but Ultratech appealed to the Supreme Court, and they've granted a stay on those penalties, at least for now.
So everything's kind of on hold while they wait for the Supreme Court.
Exactly. And Ultratech has actually also deposited a
Okay.
significant sum, over 161 crores,
Oh.
pending the outcome.
Hmm.
It's a waiting game.
Yeah.
But it's worth noting that Ultratech maintains that they have a strong case. So,
Okay, well, we'll see what happens.
yeah.
It just goes to show how complex and, frankly, unpredictable
Yeah,
these legal situations can be.
absolutely.
Speaking of complex, there's another legal matter involving a 1,000 crore issuance of redeemable preference shares
Okay.
to Jayaprakash Associates Limited.
All right.
Can you break this down for us? What are redeemable preference shares?
Sure.
And why is this particular deal causing such a stir?
Yeah, so it's a bit of a head scratcher, even for those,
Yeah.
familiar with the nuances of corporate finance.
Right.
Redeemable preference shares are like a type of hybrid security.
Yeah.
They sit somewhere between debt and equity. They offer investors a fixed dividend, like a bond,
Okay.
but they also have the potential for capital appreciation,
Gotcha.
like a stock.
Interesting. So what went wrong with this particular deal?
Right.
Why are they in arbitration now?
Well, these preference shares were supposed to be redeemed by Grasim,
Yeah.
meaning they'd buy them back
Yeah.
from Jayaprakash Associates at a predetermined price.
Right.
However, certain conditions weren't met, and that
Oh.
triggered a clause that prevented redemption.
Wow.
So now both parties are in arbitration trying to resolve this dispute.
It sounds like even seemingly straightforward
Right.
financial transactions
Yeah.
can become incredibly complicated
Oh, absolutely.
when you're dealing with these big companies.
Yeah, it's a reminder that these large corporations operate
Oh,
in a
really?
world of contracts and clauses and legal intricacies
Yeah.
that most of us rarely see.
Well, enough about legal dramas for now.
Yeah.
Let's shift gears and talk about some of Grasim's
Okay.
strategic moves, particularly their acquisitions. They've been on a bit of a buying spree lately, haven't they?
They have indeed.
Yeah.
Grasim has been actively expanding its portfolio, both within India and internationally.
Yeah.
And they're not shying away from making bold moves.
Right.
One recent example is their acquisition of a 25% stake in Akaima Co. for white cement and construction materials. PSC, a company based in the United Arab Emirates.
Right. And that boosted their total ownership to over 54%,
Exactly.
effectively making that company a subsidiary of Grasim.
That's right.
What's the strategy behind this move?
Well, this acquisition clearly demonstrates Grasim's international ambitions, particularly in the building materials sector.
Okay.
They're tapping into new markets, expanding their global footprint.
So they're looking beyond India's borders for growth opportunities.
It seems that way.
And speaking of building materials, they've also set their sights on a major stake in the India Cements Limited,
Right.
a significant player in the Indian cement market.
Absolutely, a major player.
Yeah.
And this proposed acquisition, if approved by regulators, could significantly reshape the dynamics of the Indian cement industry.
Wow.
It's a strategic move that could give Grasim a dominant position in a key sector.
It seems like they're playing a high-stakes game of chess here.
Yeah.
Strategically positioning themselves for long-term dominance.
It does seem that way.
But, as we've seen, there are always challenges to overcome. Either legal hurdles, international risks, or even just the sheer complexity of managing such a diverse and sprawling conglomerate.
Absolutely.
So, having examined all of these financial reports and corporate filings, what's the big picture here? What's your overall assessment of Grasim Industries Limited?
Grasim is a company of fascinating contradictions, you know. On one hand, you see this incredible drive for growth, this ambition to be a major player, not just in India, but globally.
Yeah.
Their acquisitions, investments, even the restructuring of their business segments all point towards this.
But on the other hand, there are these significant challenges, right? We've talked about the legal battles, the complexities of international expansion, and even that capital write-off where they had to dismantle a project.
Yeah.
It makes you wonder, can they really juggle all of this?
That's the million-dollar question, isn't it? Can they maintain this breakneck pace of expansion while also navigating these potential pitfalls?
Right.
And what does it mean for potential investors who are trying to assess whether Grasim is a smart bet?
It's a tough call.
It is.
There's a lot to like about their ambition, you know, and their performance so far. But there's also a certain level of risk that comes with this kind of aggressive growth strategy.
For sure.
It's a bit like watching a tightrope walker.
Yeah.
You know, you're impressed by their skill and daring, but you also can't help but feel a little nervous about what might happen if they lose their balance.
I think that's a great analogy. And ultimately it comes down to individual investors and their risk tolerance.
Right.
Some might see Grasim as a company with massive potential, a chance to get in on the ground floor of something really big.
Yeah.
Others might be more cautious, preferring to wait and see how these legal battles play out.
Right.
And whether they can sustain their profitability in the long run.
Exactly. There's no one-size-fits-all answer here.
Yep.
And that's what makes these deep dives so interesting.
Absolutely.
We can provide the key takeaways from these documents, highlight the potential risks and rewards, but ultimately the decision of whether or not to invest, that's something each individual listener has to grapple with on their own.
And that's how it should be.
Yeah.
Informed decision-making is all about understanding the nuances.
Right.
Weighing the pros and cons, and ultimately making a choice that aligns with your own investment philosophy and goals.
Right.
We've given you the tools and the insights.
Yeah.
Now it's your turn to dive deeper into these documents, do your own research, and decide what Grasim Industries Limited means to you.
Well said. That wraps up our deep dive into Grasim Industries Limited.
It was a good one.
We hope you found it insightful and, dare I say, even a little bit thrilling.
Yeah, a little suspense there.
Remember, knowledge is power, especially in the world of finance.
Absolutely.
Until next time, keep those financial reports coming.
Yes, please.
And we'll be here to help you make sense of it all. Happy investing, everyone.